When I prepared for this video yesterday, I was actually thinking about starting it off with the question if the next financial crisis is looming at the horizon. Well, I think we are already beyond that question. Let me tell you about what is happening in Switzerland right now. Hey guys, welcome to the High Ground. My name is Fabio, and generally I'm doing these type of videos on Thursday where we talk about more general stuff, preparedness, and on Monday you generally get a more outdoor climbing, etc. focused video. This week I have switched this schedule, so we're talking about today's topic today because it is actually going on right now. Let me start off by saying that I know that a lot of my viewers are from the United States, from the English-speaking world, and you might be very accustomed to the talks about the Silicon Valley Bank and its bankruptcy. But let me give you a little bit a scale for what we will talk about today. And to be honest, I didn't find a lot about it in public. I saw a few articles on Bloomberg, but I didn't see anything in the Wall Street Journal, New York Times, or the other former newspapers. Silicon Valley Bank was, before it went bankrupt, roughly holding $210 billion in funds from its clients. The bank that we are talking about today, Credit Suisse, is holding roughly 1.3 trillion US dollars. So this is 6 times what Silicon Valley Bank was holding. Credit Suisse is one of the top 50 banks when it comes to sizes in the world. And the other bank we will talk about, the UBS, United Bank of Switzerland, is holding actually 1.6 trillion, so 8 times of what was Silicon Valley Bank holding. And it is, I think, number 32 of the world's largest banks. So those are the actors in today's story. And let me share with you what happens here. Now, as said, the Credit Suisse is one of the world's biggest banks. And it had a little bit a rough ride over the last 2 years. There have been a lot of scandals which even really didn't have financial nature, but were more misbehavior from the guys in charge, basically, from their board. All the way down from having an investment banker that switched actually to UBS, the other actor in this story, having him followed by a private investigator with car chases through Zurich and all that stuff, right? But Credit Suisse also has considerable risks in its balance sheet. So it is estimated, and I mean those are hidden risks, so we don't actually know it, but it is estimated that they have risks that are not realized yet from between 8 to 15 billions in their balance sheet. Now, that all led to the stock market value of Credit Suisse tanking, and I think roughly half a year ago, the Saudi National Bank invested heavily in Credit Suisse. And they invested up to 9.8% of the total stocks. So they are now owning 9.8%. And you have to know, if you own more than 10% on a Swiss bank, then you have to fulfill certain regulatory requirements. And already back then, when the Saudis bought the stocks, it was clear that they don't want to go over the threshold of 10%. So they would not invest further in Credit Suisse. That was already clear 6 months ago. Now, with the current things that are going on in the US with SVB, and also other banks sliding along bankruptcy. The Credit Suisse stock value was further tanking, and a lot of people were actually withdrawing their money from Credit Suisse. Now we have to say that it is a little bit a different scenario than with SVB because Credit Suisse is and was actually still able to pay their customers their money. Now, still, for whatever reason, and we can discuss if the Saudis are really our friends, right? For whatever reason, the Saudi bank deemed it to be necessary to restate that they will not further invest into Credit Suisse last Friday. Now is Monday. And why ever, for no rational reason, because that was already clear at the beginning, this caused the stock to further tank. So down from, I think Credit Suisse was at the best times at $30 per share. There they went below $2. I think the closing course was $1.5. So, and this was where people were really afraid that Credit Suisse will go bankrupt. Now, in a first instance, the Swiss National Bank guaranteed all funds of Credit Suisse with 50 billions. Yes, 50 billions of our money. And I mean, you get used to those numbers if you're from the US because you're sending them to the Ukraine. But Switzerland is a country with 8 million inhabitants, right? So we have the population of New York. And 50 billions is really a lot. Now, but that wasn't enough to basically settle the financial markets. And people were afraid that Credit Suisse will actually have to declare bankruptcy or will at least not be able to pay its dues this Monday. Let me take a step back and tell you what the actual process should be. Now, we already had to bail out one bank in 2008. As many other governments were bailing out their banks, we also bailed out one of our banks, UBS, that we'll get into this game later, in 2008. And we said, well, this shouldn't happen again. And the parliament passed too big to fail legislation. It's basically an orderly process how a big bank that was previously deemed too big to fail, how bankruptcy of such a bank should be handled, how the business will kept running of the bank, etc. So there is a pretty solid plan in place, and it's a legally binding plan. It's a law. Now, our government sat together with the board of Credit Suisse, with the board of UBS and the Swiss National Bank over the weekend in a hotel, and they came up with the plan that UBS will buy Credit Suisse. And this will work in the following way. So everybody who is a Credit Suisse stockholder who has stocks that are roughly worth $1.5 right now per piece will receive UBS shares for a worth of $0.7. Now, basically only half of it in UBS stocks. There are a few problems with this. The first problem is that, of course, you're basically taking away the shares from the owners, and legally there should be a 6 weeks period where all the shareholders can take action against that, can file protests, etc., and actually have to agree to this. The government just signed an executive order that this period is void, so they just ignored the law. They also just ignored the law on how to actually proceed with a bankruptcy of a too big to fail bank. What they are doing now is they are guaranteeing to UBS, the new buyer, additionally 9 billions in funds for risks that might be in the balance sheet of Credit Suisse. And for all of that, UBS will basically acquire the whole bank, right? One of the largest in the world with 1.2 trillion of funds that they are holding. They will acquire them for 2 billion. I mean, that's a joke, right? That's so cheap. It's like buying a Rolls Royce for $1,000 or something like that. It's stupidly cheap. And this is what's going on in Switzerland now. I understand that you might not be terribly interested in our government constantly breaking the law. This is our issue. I know that, and I have to say a few things about that. But the implications on the financial market, they might be interesting for you. So now what happens now is that a bank that is generally healthy, UBS, acquires a totally broken bank that is almost as big as itself. As I said, UBS has 1.6 trillions of funds that they're holding. Credit Suisse has 1.2. So they're actually almost similar in size and on similar market segments. Is that actually going to work? I mean, if I have a glass of clear water and I have a smaller glass of muddy water or poisonous water and I dump it into the clear water, then the glass with clear water would have to be much bigger in order for the poison not to affect somebody who drinks the water. And I know that is a little bit simplified, a simplified example, but I wonder if UBS will be able to actually ride this Credit Suisse ship into calmer waters. Because there is not only an issue with one particular part of Credit Suisse, right? If your stock value is so bad and you basically drove your car against the wall, then there is more wrong with that bank on a systemic level. Now, that means we had the risk for one bank that holds 1.2 trillion in funds. Now we have a much bigger bank at risk that holds 2.8 trillion in funds, and it will be one of the largest banks in the world, but that has this unhealthy Credit Suisse core to it. And on the other hand, our hostage situation that we were already in with those too big to fail banks now worsened considerably, because now with the new UBS, the United UBS, we for sure can't afford that this one fails. And just so you know, we can't pay that. I mean, they have their headquarters there, but it's a huge globally connected bank, right? So Switzerland will not be able to basically help UBS because this exceeds the funds that we have. So every one of your countries, right, will have to chip in if this one goes wrong. And they all take this risky business of merging those two banks while we're at the brink of the next financial crisis. And this is something that concerns all of us, not only us in Europe. This concerns the guys over in the US. This concerns the guys in the UK. It might even concern Russia, because Credit Suisse still holds 17 billions of Russian money, right? Even the guys under sanction have more risk with this one. And I wanted to make this video to make you aware of what is going on here, because you likely don't read it in newspapers. And B, also share my thoughts what you should do about this right now. Now, let me first say a few things on the emotional side. When I read the news this morning that UBS will indeed buy Credit Suisse, and the taxpayer will basically pay for the risks they are taking, I was raging. I was super angry. And I actually needed some time with myself to calm a little bit down. But I wanted one thing to be understood. All the financial guys, all the politicians, they're just administrators of something they received for the good of the people, where much better men than they are died for. And if they fuck it up, we will come for them. This is not a call for violence. This is just a prophecy that they will not make it if they fuck up our country. Now, with that out of the way, and I assume a few of you guys share my feelings on that, let's talk about what you should do now. First of all, a lot of countries, I know that's the case in the US, also in almost all European countries, I assume it's also the case in the UK, the government guarantees for funds that you have with a bank up to a certain amount. Now, that might be $250,000, that might be $100,000, etc. But if a bank goes bankrupt, the government is guaranteeing you that it will pay you this money out up to a certain threshold. Now, the issue there is that with some banks, you have to actually invest more into them than the government is actually guaranteeing. But maybe that's only a problem for wealthy people with private banks, but just so that you know. Now the question is, if this goes down the way it could go down, what is this money worth, right? Because government doesn't have money, government will print money, and we will have a lot of inflation. And it's a good question if you would not only want to diversify your investments by not only having them with one bank, but actually having different assets. Of course, with the rising interests, it might not be a good time to actually buy soil, buy land. On the other hand, if you can afford it, the land prices, I would predict, will definitely go down over the next months when people can't afford to pay their mortgages, etc. I would assume that we will get in a similar situation where you can acquire land quite cheaply. So my personal strategy is that I will diversify my portfolio to have it with different financial institutions so that I have the government backup in case that something happens, and also just to spread the risk. Don't put all your eggs in one basket. And on the other hand, I will look at a good point in time to actually invest in assets that are not money. So that are not stocks, that are not intellectual property or something like that, but that you can actually touch on. Yeah, I'm not a financial advisor. That's just what I will do, because I also don't have the time to actually actively manage all my funds. I have to work, right? I can't sit next to a big screen and watch the stock market, what he's doing every day. But I guess with investing in land and your self-reliance, maybe buy a cow, I don't know if you can, that might be a good strategy going forward. Okay, so yeah, that's already the end of this video. I just wanted to let you know, as I said, what's going on here. It's a completely different topic, but I thought it's really important to have an eye on, to have a global eye on these things. And I think the place where the action is going on right now is actually Switzerland. My hard pick for the next issue that we will have is China. But so with the banks there and their real estate bubble, but we're going to see if I'm right there or not. I Appreciate that you spent time watching this video. I hope you learned something new. And yeah, thank you for watching. If you like this, please follow the channel, give us a thumbs up, and I'll see you next time.